Gold analysis. Wave 2, rebound facing resistance. The Wave 2 rebound is facing resistance again. Gold is moving into a highly sensitive area where the current recovery still looks more corrective than impulsively bullish. For Kelly, this is crucial because the chart has not yet claimed a trend. It is merely pushing back into the medium-term sell zone, keeping the downside scenario active unless buyers can prove themselves significantly above current levels. The political backdrop also adds a layer of uncertainty. Opposition to Trump's Fed chair plan is mounting in the Senate, and the standoff surrounding the Jerome Powell investigation is seen as a question of Fed independence rather than just a personnel issue. This is keeping market uncertainty high heading into the week. Technical structure. The chart still shows gold trapped within a broader corrective framework, with price now testing the 4,812 resistance band after a sharp rebound from lower levels. This area is significant for three reasons. It is marked as a medium-term sell zone. Price is still struggling to establish acceptance above it. The underlying structure continues to show a weaker recovery quality rather than a clean breakout. Below the current price, the technical map remains relatively clear. 4,794 is the local pivot and immediate reaction line. 4,769 is the first confirmation level if weakness begins to broaden again. 4,710 is the next high liquidity support area and the first deep downside objective. Technically, the current move still looks more like a retest into supply rather than the start of a new bullish leg. Elliott structure. From an Elliott perspective, the chart is cleaner, showing a Wave 2 rebound within a broader bearish sequence. The logic is simple. The first leg down has already formed. The current recovery is a retracement of that decline. If resistance continues to hold, the next move could be the start of Wave 3 lower. This is why the current zone is so vital. Wave 2 often looks convincing as it develops, as prices can recover sharply and test overhead structures. However, if that rebound stalls below supply, it usually means the market is not building a trend. It is merely correcting before the next directional leg. For Kelly, the current chart fits that description well. What's important next? The next reading comes from how gold acts around 4,812 and subsequently around 4,769. Bearish scenario. If the price remains suppressed below the medium-term sell zone and begins to slide below 4,769, then the Wave 2 rebound is likely nearing completion. That would make the path toward 4,710 much more natural. If 4,710 also fails to hold, the structure opens room for a deeper continuation downward. Invalidation scenario. If buyers decisively claim 4,812 and hold above it, the bearish wave count loses its quality. That would delay the sell setup and suggest the market needs a broader reevaluation. However, at the moment, price is still reacting below resistance, not breaking through it cleanly. Macro background. The macro side supports a cautious reading rather than an aggressively bullish one. Kevin Warsh's nomination remains stuck in a Senate standoff, and there are still several weeks before Chair Powell's term ends, adding uncertainty regarding how Fed leadership risks will be resolved. For gold, this means volatility may remain high. But for Kelly, volatility alone is not a signal. Structure remains the lead indicator. Kelly's reading. This remains a sell Wave 2 chart. The rebound is visible, but it is occurring at a mapped resistance zone and within a broader defensive structure. That keeps the downside scenario more attractive unless buyers can take control and hold above the current ceiling. For Kelly, the cleaner approach is to let resistance decide. As long as gold remains below 4,812, the chart still leans toward another move lower, with 4,769 as the first trigger and 4,710 as the key next liquidity reference. Conclusion. Gold is rebounding, but the recovery still looks corrective. The Elliott structure on the chart suggests price might be completing Wave 2 within a broader bearish sequence, while the 4,812 resistance zone remains the key area where sellers could take over again. As long as that zone holds, The chart keeps the downward path active toward 4,769 and then 4,710. The rebound is visible, but if this truly is Wave 2, the more significant move may still be lower.